So I had an amazing question from a subscriber the other day that I thought would actually turn into a great video idea. The question was, should I get a HELOC from the same lender that gave me my mortgage? Well, there's some definite pros and there's some cons to this situation, and I thought it'd be a great video idea, but also great dialogue in the comment section below. So let's get right into it. Welcome everybody back to the Radical Marketer YouTube channel, where I teach you how to build credit, leverage credit, and create wealth. So smash that like button for me, punch that subscribe button, and knock out that bell notification button for me, because I make videos daily and you, my friend, do not want to miss it. If it's your first time on my channel, thank you so much for stopping by. I promise not to waste your time. I promise to give you all stuff and no fluff. Do me a massive favor. If it's your first time on my channel, comment first time viewer or first time watching, so I in this amazing community can welcome you to the channel. This channel is all about helping you level up in your credit and entrepreneurial journey, and we drop videos daily and you don't want to miss it. And for all of you radical marketers out there rocking with me, subscribe, salute. It's because of you that we have blown up this channel and becoming one of the fastest growing finance channels on YouTube and one of the fastest growing finance communities. And it's literally all because of you. So you know what time it is. It's time to blow up this video. So throw your comments in the comment section. Throw 1, 2, 3, 4, 5, 6 comments in the comment section. Do your emoji dance. I don't care. Let YouTube know that this is a video that needs to be seen, because when you interact with the video by pushing that like button or by commenting, it tells YouTube other people need to see it and that everybody else can be blessed by it. So go ahead and do that for me. Join the private Facebook group as well if you haven't done that. We drop tips, tricks, hacks that we can't even talk about on the channel. It's completely free to join, no self-promotion, links in the description below. And if you have a credit question you want to get in touch with me, DM me at Radical Marketer on Instagram. Links in the description as well. We'll be doing a ton of lives here coming up soon here on Instagram. You don't want to miss it. Follow me on Instagram. All right, ladies and gentlemen, let's talk about it. So I would love to know in the comment section, would you get a HELOC with the lender that carries your mortgage? If so, put yes. If no, put no, and why. I would love to hear people's thoughts, things that we might not be thinking about. We can collaborate on this video idea and see. But here's my thought, right? And for those of you guys that don't know what a HELOC is, it's a home equity line of credit. It's basically being able to tap into the equity that you have in your home. There's only two ways to really do that: by selling your property, which we don't want to do. We want to hold on to it if we can, or getting a line of credit and using your equity as collateral, okay? Now there's some pros and some cons to that. The con is, hey, it's easy to spend the money, baby, because it's literally a lump sum of money that you can tap into whenever you want. The problem is if you default, if you can't keep up with the payments, you're gonna lose your house, okay? And that's not cool. But we teach responsibility here, and this is for entertainment purposes only, but we teach responsibility here and being a good steward and turning liabilities into assets. And we also use other people's money to create wealth. So we only use credit to purchase assets or to build our portfolio, right? We're not going out there buying the latest car and not making money from that car, right? So we use this thing to create wealth. We don't use this thing to have liabilities, right? So that's number one. Number two is, here's the thing. I don't like to keep all, personally, here's my thoughts on it. I don't like to keep all of my eggs in one basket. Case in point, if you're manufacturer spending, here's just a manufacturer spending idea. If you're, let's say you're manufacturer spending with Navy Federal, which I don't recommend you do, if you're using your credit card and then you're depositing that money in your checking account, they catch on, right? So, or if you have a line of credit and you put that money in your checking account, I don't like that. Personally, I like to diversify my accounts. So if I have a mortgage with one lender, it makes me feel more comfortable if I have a HELOC with another lender. Now here's some pros to it, okay? The pro is, if you have a relationship with the lender that gave you the mortgage, you're probably gonna have a better approval and a lower interest rate for the HELOC. That's not always, don't crucify me in the comment section for saying that, but relationship is the new currency, especially with credit unions. And I like dealing with credit unions for mortgages or HELOCs or whatever. I just feel like you get a more bang for your buck with your local credit union that's owned by its members versus the shareholders, right? So that's the key. The relationship is going to be the key. The second is going to be the convenience. And I don't think a lot of people think about that. If you have Navy Federal, Penn Fed, whatever the case is, USAA, doesn't matter. you have an online banking account, right? You can literally move the money between accounts. I don't know how many people have lines of credit where they can move it to the checking account. Saving is super simple, seamless, doesn't take much time. So the convenience, the relationship, those are pros to it, right? Like I said, the approval odds are going to be more in your favor if you have that relationship already with that institution. Now, here's some of the bad. Sometimes it can be too expensive. Sometimes the institution that you're with, you got the mortgage because you had to get it with them, or at the time that was the best rate, but there could be a better rate with a HELOC with Alliant, right? Or with whoever you want to be dealing with. Now, I also have a playlist for all the HELOCs and credit unions on my channel. Check out all the playlists. I want to plug that because you guys can learn a lot about whatever you want to learn about. It's completely free information here. Just drop gems. The gurus hate me, the banks hate me. I tell you what they don't want you to know or what they want you to pay for. People get mad all the time because I try to give the plays when I have them, but that was just a shameless plug. But one of the cons is it can be too expensive. There could be better rates out there. That's another one that people don't really think about. Sometimes being lazy and not shopping around can really come back to bite you in the butt. And then also that I like to keep the relationship separate at the same time, right? Because do you want all of your eggs in one basket? Now, for me, right, I have personally a bank with like 7 different credit unions, right? Do I have money in all those? Small amounts here and there with certain ones, but I like to be able to diversify. And I think part of building a healthy profile, whether it's in stocks, whether it's in crypto, whether it's in real estate, is diversification, right? And Ray Dalio is pretty big on that. I'm not a Ray Dalio fan, just it's not for me, but he does say diversification is what has been the key to his success, and he's been very successful in what he's done. And so for me personally, I would love to know what you think. Should you get a HELOC from the person that gave you the mortgage? If so, why? If no, why? And I'd love to be able to have dialogue in the comment section. If you don't know what a HELOC is, comment. We'll answer your questions. Join the private Facebook group. Add me on Instagram. I just really wanted to try to create a video that would create a conversation in this situation. I would also love to hear things that I might not be thinking about, right? Because this is kind of more of a collaborative video. And I like to talk about things that people have questions about, right? I mean, when it comes to a HELOC, I mean, that's... And another thing that I really wanted to mention to you guys is how I use that as a debt weapon, right? So one of the coolest ways that you can use a HELOC for is to purchase more real estate, to purchase stocks, to purchase crypto, to fund your life insurance, and then you could borrow against it and pay it back, right? With 0% credit cards, paying those down, paying them off, and then getting new ones, and then paying your HELOC back. And you're just basically moving the money around. And by the time you have a HELOC and business credit cards and life insurance, lines of credit, business lines of credit, you've really become your own bank. And you've created you've taken the model of a banking system and you've created your own bank where you can do what you want and have the flexibility. And that's just knowing the game and playing the game. And that's why I love HELOCs. I think HELOCs are some of the best debt weapons you can get with life insurance and with business credit cards. So anyways, like, comment, subscribe. That's the topic for today. Comment in the comment section below. Throw any comment in. Let's get this video out there and let's create a great dialogue about should you get a HELOC with the lender that carries your mortgage. Anyways, guys, love you guys. Take care. Salute.